Good morning, and welcome to Strictly Business. I'm your host, Penny Font. This podcast features conversations with Louisiana's most influential CEOs, entrepreneurs, and community leaders, with the goal of providing insights, ideas, and inspiration to help you and your business grow. Strictly Business is brought to you by the East Baton Rouge Parish Library and Neighbors Federal Credit Union. Without their support, this project would not be possible. Before we begin, here is a brief message from each of our sponsors.
The East Baton Rouge Parish Library believes that a thriving business community is good for us all. That's why we help entrepreneurs start businesses with tools like Gale Business Builder. Keep commerce rolling by providing access to computers, printers, and free Wi-Fi at 14 branch locations. Get a library card. Grow your business at ebrpl.com/business.
At Neighbors Federal Credit Union, we believe stronger schools build stronger communities. And with the generosity of our members and staff, we're making a difference. We've awarded 54 project grants, totaling over $220,000 for on-campus improvements. We've provided 99 scholarships worth nearly $300,000 to help dreams take flight. And through our mascot checking program, we've donated an additional $560,000 in unencumbered funds to local schools. Neighbors Federal Credit Union. We are neighbors helping neighbors.
Thank you all. We want to keep Strictly Business as interactive as possible. So for those joining us live, here's an icebreaker question for you. Submit your vote in the comments, and the results will be posted at the end of the podcast. Investar Bank's story began not in a gleaming tower, but in a single-wide trailer on Perkins Road, a moment captured back in 2006 in the pages of the business report. At the time, one customer joked that he wasn't sure about putting his money in a bank that could be hauled off by a truck. Yet from those humble beginnings, John D'Angelo has steered Investar through hurricanes, recessions, and regulatory waves, growing it branch by branch until, in 2014, he stood on the NASDAQ stage in Times Square ringing the opening bell. Today, Investar has grown into a publicly traded regional bank with a strong Gulf South presence, including 3 banks in the Houston area and 6 in Alabama, and is now preparing for another major step, acquiring a bank in North Texas in a deal valued at $83.6 million. John, welcome, and thank you so much for joining us today.
Thank you, Penny. Great to be here with you.
So I know viewers are dying to learn more about the Texas deal, but before we take a look ahead, let's take a step back. Because to understand Investar's strategy now, it helps to understand how it all began. So when you think back to that first branch in a single-wide trailer, what stands out to you most about those early days, and how did they shape your approach to building Investar?
So, Penny, when I tell you we did everything, we did everything. We put the trash out, we cleaned the bathrooms, we did the landscaping, we did a little bit of everything. And keep in mind, I was coming from a company that I was the president of that was 800 employees, and I went to 5. And so, from having everything done for you to having to do everything yourself was a huge change. But I'll say this to you. What I learned was it's all about process. And, there were times when I wanted to be at point D. We were starting at A. I wanted to be at D, but I had to go through B and C. And that's what you learn along the way. And I think if I learned anything from those humble beginnings, it would be that I had to go through a process. I had to be patient, much more patient than I like being, to be honest with you. But I had to be patient and go through that process and then bring people along with you on the journey. So I think that would be the biggest thing I could add and share with others is that be patient, understand you have to go through the process. Don't skip parts of it or pieces of it. Stay with the process.
Very valuable advice. So Investar already has a hold across the Gulf South with locations in, of course, Louisiana, Houston, and Alabama. So what made this additional Texas acquisition the right next move in your regional growth strategy?
So we bought a bank in Houston in 2019, Mainland Bank. And we went in there and we really liked the results of that purchase. We were able to assimilate a team there and really do, a lot of good things. In fact, if you look today, That's one of our fastest growing markets. They're providing a lot of loans and deposits to the overall bank. So we were really like what we were seeing. Secondly, I will tell you, we spent the last, call it 2.5, 3 years building people infrastructure and getting ourselves ready for something. We didn't know what. We went through COVID, we went through a Hurricane Ida, we went through rising interest rates. We went through the SVB debacle. We went through a lot of things, and through all of that, we just kept thinking there was something for us. So what we did was try to prepare ourselves for that something. And so we built a lot of people infrastructure, and we had ourselves in a great position for an opportunity. And so when this Texas opportunity came our way, we jumped on it. And it was a blessing, by the way, that the culture of this company really meshed well with our culture, the Investar culture. And maybe we can talk a little bit about that more as we go forward. But I would tell you that we loved what we were seeing in Texas. We felt like we were positioned for it from a people perspective and from an organizational perspective. So it felt like the right fit.
So how are you preparing the organization culturally and operationally before the deal actually closes? Are there additional measures that you're taking?
Yes, let me tell you this first, though. So, what we do is we set up a team here, and they meet with the team there with F&B. Okay, and they're meeting almost every day, every other day. And where we normally start is culture. And you'll hear me talk a lot about culture, Penny, because I think it drives everything in my mind. Okay, so I think that even the beginning of a deal started with, okay, do our cultures mesh? Well, we decided yes, it does. So then we get into the nitty gritty of it, and so what we found was they had five values, and we compared them to our five values. Would you believe it if I told you we had the same five values? Now we had one or two more, but of the five values they had, we had all five values. It doesn't get better than this, right? Because I mean, this means that you have an organization that's aligned with you. We're joined at the hip almost, and so that's how we get ready. That's how we get started. We start with culture. And then look, there are other things, other technical things, nuances. We're starting to map over their products to our products. We're mapping over, who from that organization would take what position with us, and how does that all look. And by the way, I'm happy to tell you that there are a number of people from that organization that are going to fit in great with what we're doing over here from a technology perspective, from a technical perspective. So we're really happy with that. And we've not necessarily had that in our prior deals. We've done 7 deals prior to this one. This is number 8. And they were smaller deals, though. And in all cases, we didn't have the sophistication that we're seeing from this team because this bank's a $1.7 billion bank. So it's much bigger than what we've historically done. So, but mapping over things, getting the people situation, the organizational chart straight, those are the kinds of things that we're worrying and thinking about right now.
That's an amazing start, though. So, what are the key success markers that you'll be looking for in the first year?
Well, I might surprise you with this answer. Okay, so I give this speech. Everybody that starts here, they come to Baton Rouge and they're onboarded here in Baton Rouge. Okay, so they come in and they have their meetings, but I'll step down. I'm on floor 3. They're on 2. I'll step down there and I give everyone the same speech. And it's this: look, take the first 6 months and learn the organization, learn our culture, learn the way we do things, learn the process that you're involved in. And don't put pressure on yourself. I want you to take these 6 months and spend time asking questions, understanding, without pressure on you. And so that's what we'll normally do. And I told them the same thing. I mean, we go in, and I told them when we had announced a deal, we had a webcast more or less like this, by the way. And I just said, look, I want you to take the first 6 months to learn us, learn the culture, understand your role, understand what you're going to be doing. Now, I'll tell you this: after 6 months, then we feel a little bit differently. Then we start to get to profitability and growth and for loans and deposits and fees and all those things. So, it's not like you're on vacation over here, but, we give you 6 months to sort of get your hands around things. And then we feel like that really positions people for success moving forward. So, and we talk about that too, by the way. We let them know, hey, look, got your first 6 months, and after that, be ready to roll. So that's why you need to be asking all these questions and understanding what you're supposed to be doing and how you're supposed to be doing it in our technology, in those first 6 months. So that's sort of how we've approached it. It's worked really well for us over the years. So, and again, that's either a partnership, a merger like this, or new employees.
That sounds like a great approach. So, are there any lessons that you've taken from previous expansions that shape your approach, that approach?
Well, yeah, I think I know everything not to do. We've learned a lot from the previous 7 deals we've done. But I think first and foremost, and this is why I come back to culture. Other deals we've done, we realized probably sooner than later that we had a couple of people in each of them that really probably just didn't fit our culture. And what we learned is that we can't wait on that. We have to change that, and change. I mean, either they get on board with our culture, or maybe it's just not the right place for them, and that's okay too. By the way, not everybody has to fit into Investar. I mean, so if they don't fit in, just recognizing that and understanding that, and treating them with respect, and hopefully them treating us with respect. In the early days when we do these mergers, I wanted to be the acquirer of choice, so I wanted to do everything right by everybody. But what I quickly realized was that I was not treated the same way. If someone stayed with us and they were ready to leave, they were leaving. They didn't care what I felt or the bank felt or anything like that. They were leaving. So I think fairly quickly. You see who's fitting in, you see who's not fitting in. I'll tell you though, the majority of the people normally fit in. On each of the deals we've done, I can only think about one, possibly two people that we just sort of said, hey, we should have recognized and realized. And what sort of happened in some of those instances was, we're acquiring these smaller banks, and they sort of had an heir apparent to the throne to be the CEO, and we would go in, and their leadership would say, John, you really need to consider this person to run the market for you, and we would honor that because we're very honorable in these deals, and I'd honor that, only to realize that maybe they were just not the right person, for what we were trying to accomplish, and what I learned was recognizing that, understanding that, and again treating everybody with respect.
Gotcha. So, shifting gears a little bit, strategic expansion takes more than ambition, it takes timing, and that depends, of course, on the broader economic landscape. Right now, executives everywhere are trying to gauge when and how to push forward with growth plans amid changing conditions. You've had a front row view of very different local economies: Louisiana's industrial base, Houston's energy driven market, and Alabama's manufacturing corridor. So that really gives you a unique lens on what's happening now and what's coming next. So, which economic indicators do you personally watch most closely?
Well, for us, it's pretty simple, to be honest with you. It's interest rates. I mean, that's the thing I'm watching the most. I mean, interest rates affect everything we do. So, just briefly, banks can take different approaches. So there are banks that have a spread. They make their income through the spread between your cost of deposits and what you lend it out at. That's the spread. That's the margin, right? So and that's us. That's how we make our money primarily. There are other banks that maybe have an insurance company or a brokerage company, or other mortgage company, or different things that provide fee income to them. But for us, we're a spread company, and so spreads driven by interest rates, right? More or less. So we're watching everything that's associated with changes in interest rates. That's Fed policy. That's GDP. That's the employment reports. I mean, all those things. That's consumer confidence. It's home sales. I mean, those are the things that we're watching and sort of keeping our eye on, and making sure that we're comfortable with where the economy is, or at the very least understanding which way it's heading, up or down, and sort of position ourselves for that. We learned a long time ago. So the bank's going to be 20 years old, by the way, in June. It's coming June. But we learned in the early days that we had to be proactive and not reactionary. So by understanding those metrics, it gives us a good indication of where things are heading. Another indication is, our loan pipeline. Is it robust? Is it not so robust? And those kinds of things help us determine, okay, where do we need to be? How do we need to position the bank for whatever we're about to get. And we try to be neutral, by the way, just for the record. We want to be neutral in everything we do. We don't want to take outsized risk, large concentrations, for instance, placing bets, big bet on something. We're very, we're risk managers. That's what we need to do. So we try to manage that through balance.
So, how do you see rate changes impacting business borrowing and investment appetite right now?
So let's step back and let's step forward. I think for the last, year and a half, 2 years, interest rates were screaming up, created a lot of uncertainty. And as a result, we found people were stepping back from things that they would historically do. So investment, borrowing, they were stepping back. We just didn't see a lot of it, to be quite honest with you. And probably starting in the first quarter of this year, of 2025, we start to see that change a bit. I think although rates didn't come screaming down, they started to come down. I think it started to take away some of the uncertainty. Now, I'll tell you, no sooner did we feel that we had Liberation Day, and it sort of, the tariffs and everything, it sort of changed everything a bit there. But again, we came past that. So I'll tell you, for the last 2 quarters, the second quarter and the third quarter, we start to see things start to pick up again. We start to see people do things again. We start to see people, price in interest rates and how they affected their businesses, and start to do some things. I think with this last rate decrease. And again, it's forecasted that there's going to be another one this month, which would be great, by the way. We're starting to see things pick up a bit. The housing market hasn't as much. It was interesting. Rates came down on the short end of the curve, but on a longer end, the 10-year, they didn't. So that sort of affected mortgage rates. So we didn't quite see that yet, but I think that's coming. I think as we come into the end of this year, we'll start to see mortgage rates come down again. I think we'll see some of those other rates start to come down. So I sort of like where everything's heading, and sort of the way the Fed's starting to handle it now, finally recognizing that, okay, hey, we have to do something. So I think those are all positive things.
So, which industries or sectors look strongest from your vantage point?
Yeah, again, I might surprise you with this answer. We like oil and gas services a lot. I mean, we're seeing some opportunities there. For a while, banks would really stay away from that, and I would say to you, now we have the benefit of seeing who's been successful in an up market and a down market. So, you have many of those oil and gas service companies that have really done a good job through different cycles, and you can see who those are, and those are probably the ones you want to, place bets on. Um, Business banking, small business. I think small businesses, we're starting to see that pick up a bit. And that's across the board, especially here in Louisiana, because, you have some things happening at the Amazon construction that's gone on. I think there's a few others that have been announced, big projects. And I think so, what happens is these small businesses sort of follow that. And so, we're starting to see some things that we like there. And I guess lastly, multifamily, primarily student housing. We've been seeing some good opportunities with that. So I think you're starting to see some things pick up again, and starting to head in a good direction.
Awesome. So, obviously, navigating the economy is just part of it. Growth also depends on having the right banking strategy behind you. Sometimes banking can feel purely transactional, but as you know, the right relationship can actually unlock capital, strengthen cash flow, and fuel long term growth. So, beyond lending, how can banks act as strategic partners, sharing market insight or making connections that help companies grow?
Yep, this is where I love being a banker, because what happens is you're a trusted advisor. And so I think the advice, I think that's probably the biggest thing that banks can help other businesses with. I mean, we can be there and help them to understand what's important, how we're viewing their transaction or their purchase or whatever they're doing. We have years of experience. We also have experience with the market, with what's currently happening when we're talking to these companies. So I would say that's probably the biggest thing is, being the trusted advisor, the advice. But I would also tell you, secondly, there's a lot of great treasury management tools. That all has to do with cash flow and how you manage your cash flow, how you're moving money and things such as that. So, it's sort of interesting. Back when I first came into banking, it was all about the loans. And today that's changed completely. I mean, it's as much about deposits and moving money and cash flow and doing all those things as anything else. So I think that's another place where we can be very helpful and beneficial. And in fact, today, because of technology, we can offer all the same tools that these big banks are offering. So the big banks can't offer anything that we can't offer here at Investar. So, so that's been a real plus too. So I would think the advice first and then the ability to move money.
Interesting. So, how can executives make sure their banking strategy grows in step with their company's long term plans rather than just kind of reacting deal by deal?
Yeah. So, what we try to do over here is for our biggest customers, what we do is we meet with them annually. And so we'll go sit down and have a meeting with them, and they'll bring either their owner, their CEO, whatever the case may be, the size of the company, their CFO, and in some cases even their sales leader, and we'll sit down in a room and we'll just talk about what they're going to do in the coming year. And the more information they give us, the more helpful we can be. So by having these types of meetings and understanding where a business wants to go in the coming year, once again, we can give them great advice. We can talk about how to structure. We can talk to them how to position themselves, which I think is probably as important as anything today. Understanding how's the bank going to look at this kind of transaction? How's the bank going to consider it? How's the bank going to underwrite it? So I think to have that guidance and that advice, once again, from a trusted advisor, I mean, I think that really, really helps businesses out, to sort of understand what they can and what they can't do. And so we find in fact, I love to go in those meetings. I mean, normally it's our lenders that are doing it, but I just, I'm a lender at heart. I'm probably a little bit different than most CEOs. I came from the sales side, although I have an accounting background, BS in accounting. But I just think I love that. I love getting out. I love meeting these customers. I love hearing what they're going to do. Nothing excites me more than to hear, one of the businesses that we're banking that they're going to grow, they're going to go purchase, or they're going to buy another company, or whatever it is they're going to do. It just really, it's energizing to me.
I'm not surprised to hear you say that. So I want to get a little more inside advice. How can companies use their banking relationship to stay resilient through economic ups and downs, especially when credit tightens?
Yeah. I think what we have tried to do here at Investar is we don't want to surprise anybody with anything. So, if we're seeing something that's concerning us, a red flag of some sort, we're going to start talking to the customer about it. And by the way, that's good or bad. It could be good too. So I mean, the things that we sort of think about, what we look at is, okay, the management team. Has this management team been through cycles? This is where my gray hair comes in handy, by the way. I can't think of many times it does, but this is where it comes in handy because, I've been through all these cycles. So when I sit down, you can start to evaluate through people. Okay, they've been through a down cycle. So for instance, oil and gas, they've been through a down cycle. They understand what's going to happen. They understand how it feels. They understand what they need to be aware of and the things that they need to be considering. So I think that, that's important. Capital is important. Liquidity, cash on hand. Banks always like to see a customer that, hey, I'm coming to buy a building, I'm buying another business, and I need to finance it. Well, we want to make sure that we're going to get repaid. I mean, that's what's expected of us, right? We have all these shareholders and all these people that are expecting us to do that. So a liquid or cash reserve can really help. Now, I'm not saying you have to have enough to pay off the loan. Nobody expects that, but enough to service the debt if you would have to, if there was a downturn or things slowed up, whatever the case may be. So, I think capital, liquidity, and then I guess lastly, I would say the sponsorship. So either the company, if we're doing something without a guarantee, how strong is that company? What's their leverage ratio, meaning their capital, their ability to carry themselves through difficult times. Those are the kinds of things that we're thinking about. But for me personally, I first and foremost look at the operator. What's their experience? What have they done? What can they do in good and bad environments? Now, you may be asking yourself, we used to tease about this with banks. We underwrite to a worst case scenario. I mean, that's risk management, right? You need to understand what a company can do in up times and downtimes. And, I'll tell you, we've been very blessed, right? What, it's been since '07, '08, '09, since you've had a recession or anything like that. So you've had a number of years here, that have been really, really good. So that's been good news for banks. And you can see that in these earnings releases. I mean, you're not seeing any credit issues whatsoever from the banks. That's good. That's a great thing. That's the industry's strong, the industry's robust right now, the industry's well capitalized. You still have a lot of good things going on in the banking industry. So, but again, those are the things we sort of consider and think about.
Thank you for that insight. So as you well know, the banking industry is shifting from consolidation to competition to changing customer expectations. We've seen a lot of that in the past decade or so. So how do you see business clients' expectations of their banks changing?
Yeah, look, I think back when I first came into this industry to today, and it's been over 30 years now. But I see today they want quick answers. They want, and look, even if it's a no, that's okay too, by the way. They want a quick answer. And I think we owe that to our customers. But I think that's an expectation of efficiency, of fluidness, and giving an answer. I think secondly, they want to have the ability through technology to move their money, to transfer between accounts, to wire money out, to wire money in. Technology is becoming more and more important. Now, we still like the relationship side of banking and we still want to get in front of our customers. So we try to do that, but some customers just don't want as much of that, but we give the customer the choice. You can interact with us however you want to interact with us. But I think there's an expectation now that you have basic technology, which again, I just mentioned to you, we have as good, as the big banks have. So I feel good about our technology. It's online banking, that's been able to transfer the money through our treasury management services. That's helping, invest the money overnight, doing things like that. So, there are a lot of things I think the expectations to today that, you didn't have, you couldn't provide previously.
So what's coming next in digital banking that business leaders should be preparing for?
So I think the biggest thing that we're looking at right now, and it affects things a little bit differently, um, than what you might think, but Fed Now. And so here's what Fed Now is. So today, banks transfer through an intermediary to the Fed. So it goes through a banker's bank or some other intermediary, and it goes into the Fed. And what Fed Now is going to provide is the opportunity for a bank to go directly to the Fed. So you can sort of be eliminating the middleman somewhat, and so you can go directly to the Fed. And I think so that means the speed. So I mean, things that took a little bit longer previously will now be seconds. I mean, that could run through, and availability and things such as that. So I think that's sort of the next big thing, that we're seeing. The other thing I'll tell you is I just think the brick and mortar. I'm more and more every day. I just don't know if you need as much of it. I'm not saying you don't need it. I'm just not sure if you can need as much of it. So it may be that, certain markets, maybe instead of having 3, 4, 5 branches, you might have 1 or 2. I mean, so because of technology, people can conduct business without having to come into the branch. But if they do want to come into the branch, there's one there. I mean, you've seen like a big bank like JP Morgan Chase, they sort of consolidate into these big financial centers, and they have a lot less of them, throughout the United States. So I think, normally those big banks are a bit ahead of the curve in their strategic thinking in terms of that kind of thing. So I think you're probably going to start to see more banks sort of head in that direction. And even us, I mean, we've started to change what a branch looks like to us. I mean, we just opened up in Conroe, Texas, and we opened up in an office building, first floor. It's staffed light. It doesn't have the same staffing that a full service branch would have, although it provides all those services. And that's a way for us to go into a new market, and not have as much labor cost. To get into that market, to start that, we lease those things for probably 2 years, and if it works, then we're off to the races. If we need a little bit more time to prove it out, we can do that. It just gives us tremendous flexibility that if you go buy a freestanding branch, it's a little bit harder to say, okay, wait, this didn't work the way I thought it was going to work out.
Makes a lot of sense. John, I'd like to close by getting your perspective on leadership because it's what drives pretty much everything we've discussed today. First, what's the boldest leadership move you've made and what did you learn from it?
So the boldest move I've made occurred in October of 2023. And, we had a strategy of grow, 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 grow. Did I say grow? Okay. And we were opening up branches, and we were hiring people, and we were just growing. And sort of that was sort of the strategy. And as interest rates went screaming up, we quickly realized, and this is what I was telling you before, where you have to be proactive in your thought process and you sometimes can't wait. But we realized that grow, grow, grow strategy just was not going to work in the environment that we were heading into. So we went to the board, management did, and we said, look, we think we need to shrink the bank here. We think we need to pull back a bit here. And to to live to fight another day kind of thing. I mean, not that anything was bad or wrong with us, by the way, but just that the grow 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 strategy maybe was not appropriate for that time. And so what we moved to is a strategy of consistent quality earnings, meaning let's bring more money to the bottom line. We're going to focus on being more efficient. We're going to focus on being more profitable. Okay, that was a hard thing to do because this company, for what, 17 years, 16 years had grown on grow, 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 grow. So to reverse that strategy was not an easy choice to make. And within that choice, we had to make decisions like closing 5 branches. We had to make decisions like we're moving away from ATMs in some of these branches, and find another way to offer that service, by the way. We made decisions like, shuttering, our mortgage offering. So we made a lot of tough decisions. It was not easy, I can tell you. But guess what? Had we not made those decisions and done those things, we would not be having the opportunity today to buy the First National Bank that we're buying. We would not have had that opportunity. We would not have been positioned for it. But because of the tough decisions and bold decisiveness back then, we positioned ourselves, to be able to move forward today and really put Investar on a path that we can do some great things. I am really, really excited about what I'm seeing right now. Since we announced that deal, the inbound calls we're getting from banks that want to do something with us have been incredible. I mean, we literally received national recognition for that deal because of the offering we did. It was a preferred stock offering as compared to common stock, and the work we did.
That's amazing. Thank you for sharing that. Last question.
Yes.
What qualities do you think will define successful leaders in the next decade?
So, once again, 2 years ago, I lived this myself. I had to sit back and decide, hey, are you up to this? Are you up to evolving? Are you up to changing? Are you ready for that? Can you do that yourself? You've asked people to do this your whole career, but can you do it? And I had to do it, Penny. I had to make some decisions about myself. And so to answer that question, I would tell you this: you need a change agent. You need people that are flexible and understanding of the environment. So we have a whole new sales force, or workforce, forget sales force, a workforce today. Like this younger workforce is completely different. There was a time when I shook my head about it, but today, as I've evolved, I recognize their greatness. I recognize what they bring to the table that I never could have brought to the table. They bring a technology slant and thought process that's incredible. They bring thoughts on social media. They bring thoughts on managing people. I have my young assistant. She is incredible. She can drive me to thought processes and things that just completely out of the box. Look, I have it all up in here, but she helps me bring it out and put it on paper. And so the ability to evolve and grow with your environment. And I don't think you're ever too old to do that. And I think if you recognize that and are willing to just open up and embrace it, embrace change, embrace what's being given to you, I think those are the leaders that I think are going to be successful in the technological environment that we're heading in. And where all companies, forget banks, every company's going to have to deal with this or are dealing with it right now. So once I made my mind up that I could do that, I once again, I'm having the time of my life. I'm like, the only other time I had as much fun as this is when we started the bank and the trail. That was fun too, by the way. Even though I was sweeping and doing everything else, I enjoyed the heck out of that. But now I'm equally as energized and excited, and I see a path forward for this bank that I couldn't imagine. I just couldn't imagine. So I'm thankful to God. I'm thankful to everybody over here that works here and helps us with that. And help shape this place and mold this place. Again, if you can't tell, I'm happy, excited.
Absolutely. John, thank you so much for taking the time to share your incredible story and your insights. You're right on target with that last one.
Well, thank you, Penny. And look, we appreciate you guys. I was so excited to have the opportunity to meet with you guys today and talk with you. It's always good being with you. So thank you for having me on.
And thanks also to our viewers for tuning in, as well as our sponsors, Neighbors Federal Credit Union and the East Baton Rouge Parish Library, for making this experience possible. Please join us again for the November 19th episode of Strictly Business. Until then, on behalf of our show's director, Tim Coles, and me, enjoy and make your day a great one.